Good morning, everyone. Our subject is financial services, and our question is, what are the regulatory aspects of leasing? The regulatory aspects of leasing refers to the rules, laws, and guidelines that govern leasing transactions. These regulations are in the place to ensure fairness, transparency, and accountability between the lessor, means the owner, and the lessee, means the user. It means the regulatory aspects of leasing are the rules and the laws that control how leasing works. These rules make sure that both the lessor means the owner and the lessee means the user follow the fair practices and are clear about their responsibilities and treat each other fairly during the lease agreement. Here are some key components. First, legal framework. Laws that define the rights and obligation of the lessor and the lessee, such as the Indian Contract Act or specific leasing laws. Regulation determine what can be leased and the terms of leasing contracts. It means laws like the Indian Contract Act or any specific leasing laws explain the rights and duties of the lessor, means the owner, and the lessee, means the user. These rules also decide what things can be leased and the conditions of the lease agreements. Next point is registration requirement. Some countries require lease agreement, especially for high value assets like real estate, to be registered with the government authorities. It means some countries lease agreements, especially for the expensive things like real estate, must be registered with the government. Our third point is taxation rules, guidelines on how lease payments are treated for the tax purpose. In many jurisdictions, lessees can deduct lease payments as expenses, and lessor must declare lease income for the taxation. It means taxation rules explain how lease payments are handled for the taxes purpose. In many places, leases means the user can treat lease payments as expenses to reduce their taxes, while lessor means the owner must report lease income and pay tax on it. Our fourth point is accounting standards. Standards like IFRS 16 and GAAP required companies to record lease transactions, example, assets and liabilities in their financial statement to ensure transparency. First of all, we will understand what is IFRS 16 and then GAAP. First of all, we will understand the full form and then meaning of the IFRS 16. IFRS 16 stands for the International Financial Reporting Standard 16. IFRS 16 is a rule used in accounting to record the lease. It required businesses to show all the major leases on their financial statement as assets for the right to use the leased item, and for the liabilities, the payments they need to make in the future. This ensures that companies provide a clear picture and their financial obligations and the resources they control, making their finances more transparent. Next, GAAP. GAAP stands for Generally Accepted Accounting Principles. GAAP is a set of rules and guidelines that companies follow to prepare and present their financial statements. These rules ensure that financial reports are consistent so they can compare across companies, accurate so that reflect the real financial position, and transparent so investor, lenders and other can trust them. It's like a rule book for accounting, making sure everyone follows the same method. Our fifth point is consumer protection law. Rules to protect lessee from unfair terms or hidden cost. Example, disclosure about interest rate penalties or early termination fees, which means customer protection law are rules that helps protect lessee, means the user, from unfair lease terms or hidden cost. For example, these rules make sure that important information like interest rates, penalties, or fees for ending the lease early is clearly explained. Our sixth point is sector specific regulations. Different industries like real estate, automobile, or equipment leasing may have their own specific leasing regulations. It means different industries like real estates, cars, or equipment leasing may have their own special rules and regulations for the leasing purpose. Our seventh point is financial regulations. If the lessor, means the owner, is a financial institution, example a bank, leasing activities may fall under banking regulations, includes capital adequacy norms and reporting requirements. It means financial regulations are that financial institutions like banks must follow when they lease assets. For example, if a bank is involved in leasing, it must follow rules about how much money it should have in the reserve and what financial information it must report it. Our eighth point is ownership and recovery rules. Laws that define ownership rights during and after the lease. Rules about if the lessee defaults on payment. It means ownership and recovery rules are laws that explain who owns the leased assets during and after the lease period. These rules covers what happens if lessee, means the user, fails to make the payment, including how the lessor, means the owner, can take back the assets. Why regulatory aspects are important? First, protect interest. Ensures both the lessor and the lessee for the fair practices. It means these rules protect the rights of both the lessor, means the owner, and the lessee, means the user, ensuring both sides follow the fair and honest practices during the lease agreement. Our second point is prevent disputes. Clearly defined rules minimize misunderstanding. It means these Rules helps avoid disputes by clearly explaining everything. So there's less chance of confusion or any misunderstandings. Our next point is encourages economic growth. A well regulated leasing market supports business growth by providing access to the assets. It means these rules helps the businesses grow by creating a well regulated leasing market and making it easier for them to get the assets they need. Our next point is promote transparency. Proper disclosures and accounting prevent fraud and ensure financial clarity. It means these rules promote transparency by requiring clear information and proper accounting methods, helping to prevent fraud and maintain their financial trust. Regulatory aspects of leasing. In simple, regulatory aspects creates a fair and structured system for leasing. Ensure everyone involved knows their right, responsibilities and the financial obligations.